Good afternoon, friends. I think the previous panel has made my job easy to keep you awake, so I'm not exactly after the lunch. So first, let me welcome the power panel in the room, Animesh, Rajiv, and Vineet, who represent the two unicorn Insurtech in the country, and also the largest private sector financial services and insurance incumbent. So I can guarantee the room that this is going to be very insightful and sharp perspective. What really matters is the topic itself, which is Insurtech. And Insurtech are really well poised to contribute towards insurance for all over the next 2 decades. I say this with confidence because over the last 2 decades, they have proved that insurance is, and the business of insurance can be done and can be kept completely simple and innovative and customer-centric. It gets into its best shape. With that, let me first go to Animesh and take his perspective. Animesh, you have established 2 fantastic Insurtech organizations over the last decade or so. One in aggregator and distributor space and one full stack digital insurance company. Over the last decade, what big shift do you see in terms of customer segment, business model, and value chain focus for Insurtech?
Thanks, Vivek. I think honored to be here. And I think there's a lot of things which have evolved in last 5 to 10 years. And I'll not give credit to the insurance space, rather the whole fintech space, be it payments, be it banks, or any of these domains. India has evolved a lot, which directly contributes to insurance as a space. The customer touch points have evolved a lot. So now the approach from a consumer point of view is majorly digital first in some sense. Even if the distribution model is different, but customer is looking for something which is very convenient at home, right? And that's what has happened in last 5 to 10 years, or maybe longer in India now. The value chain has evolved a lot. Now there is potential of efficiency in every touch point, which can be passed on to the relevant stakeholders and especially customers. The whole value chain creation itself is customer backwards, which was not the case maybe 15, 20 years back, which was more distribution-led, that how the distribution can make money and then they can actually pass on the benefit to the consumer is completely flipped now, right? It's more customer backwards, that how can you cater to the customer's need, make it more convenient, and then the rest of the stakeholders can take a pie out of it, right? So I think these are the evolutions. On the business model also, I'll take our example, like the way we are able to contribute to the value chain itself. Being direct helps us to kind of save and be slightly more efficient on all these touch points, and we are able to pass on that benefit to the customer back, right? So that's the evolution, and I think still early stage, a lot of things has to happen, especially in the insurance space, and all these surrounding domains are helping us to actually achieve that, right? It'll be our failure not to kind of grab that opportunity.
Okay. So Vineet, I'm going to you. You've led both Insurtech and insurance incumbent organizations, and you've seen a lot on both sides of the table. What do you think is the relationship today between the two and how it is helping the sector?
So I think the relationship, maybe at the face of it, looks like they might be competing, but if you ask me, 90% of the use case scenarios that could come out of this, we are complementing each other. We're not really competing with each other. And maybe let me just explain that a little bit. One is clearly, an Insurtech could help an insurance company, especially on the distribution side, to reach out to a lot of places with a much more cost-efficient model than what you would do if you were only trying to set up a physical channel of distribution. So Insurtech-led distribution will definitely help us reach, much bigger geographies and much deeper into the Bharat. The second is process efficiency. So there are a lot of Insurtechs which are just focusing on small use cases for improving a process efficiency, in which we could look at building scale, building this thing. So for example, I would just quote that we might not have increased any manpower in the operational side at all, because technology and a lot of solution and partnering that we have done with Insurtech has helped us get that scale and efficiency. And we run this as a program. So we run this as a program every year. We have a brand called FutureEns, through which we just tie up with startups and give small use cases, which helps them also grow up, and it also helps us get more efficiency. And then third one is, which we have not seen too much in India yet, is about helping insurance company manage their risk better. So, more segmentation, more data analytics, etc. Not too much has happened right now, but I think there is a lot of space to build on that. So if you look at these three cases, they are clearly complementary. Maybe the competing part would only be if, there are two manufacturers, one is Insurtech, one is not, one is more, let's say, traditional. There could be a competing angle there, but otherwise I would see it as a very, very complementary set of business models.
Thanks for that. Rajiv, you've been part of Insurtech journey for the last decade and a half. In the same time, average, I think 10 Insurtech were emerging every year in the country and more than 150 operating in the country today. But only 2 are unicorns, so to say. So the valuation has really not gone up. What do you think comes in the way of scaling up, and what are the challenges? If you can just reflect your views.
Thank you, Vivek. Small correction. So I have also been part of the traditional side of business for more than a decade.
Fantastic.
I was in SBI Life, so I have been in Insurtech only in the last 4-5 years. So not a year and a half, I presume, is the founder who started this company, Yashish. So great. I think clearly, given the population size of this country, as Vineet rightly said, both traditional players and Insurtech players will coexist. And there is enough room for many more large Insurtech players to come into this country. I think clearly if we have to have insurance for all the way 2047, you need more than one policy bazaar, to be able to create the Insurtech model in this country. So while Policy Bazaar was built, in 2008, it took many years, for it to crack what it really needs to be done to grow or to scale over these years. I think today we are happy that we grow at 50% CAGR. But I think the initial challenges, obviously, the regulators didn't understand what an aggregator was, what a Insurtech player does. So regulatory complexities were one of the key challenges initially, which I think we had to deal with. And most players who enter today will have to have the patience to deal with that, particularly with AI, blockchain coming in, explaining, to the regulators how this operates is very, very crucial. Second, gaining trust. I remember there was a time out of the 100 people who connected with us, maybe 3 people bought a policy, just a couple of years ago. And that number steadily kept increasing, and we reached to about 8 or 9, customers buying a policy. So we realized 3 years ago that what is missing? Why are people coming to us? It's not that they're not buying a policy. They eventually go and buy a policy from, from a bank or from an agent. So I think India being, the economy being what it is, people still require that physical presence. So what we started offering was some of our best telecallers were given the freedom to go and meet the customers post office hours. And that improved our number to a double-digit number. And just about 2 years back, we started POSPs. So that helped us to double the number. So eventually what I'm trying to tell you is, in a country like India, while Insurtech will grow, you need to keep doing a lot of work around that to keep growing. But I guess the model will coexist for a long time. The hybrid model will coexist for a long time. Third is, I think, handling legacy systems. So how does an Insurtech operate? Insurtech operates because we have strong partnerships with large insurance companies like Vineet representing or, Animesh representing. But there are a lot of players who still have legacy systems, So dealing with those legacy systems, integrating with them to be able to make the same offering and create comfort amongst the customers is also a key challenge, So that is something which I think people probably have tried, have struggled, or have lost patience, Fourth, I think if you remember, we have spent close to 400 crores a year on creating visibility. I think it's just not enough to have a great technology platform and a great call center. But if you don't create visibility, so we've spent a lot of money only on TV year after year for the last decade just to create the visibility factor. Particularly, how do we reach tier 2, tier 3 towns? While we are all proud of the tier 1 market, but somewhere the next growth is going to come from tier 2, tier 3. And that's what we've done with our POSPs. We have tried to place a POSP in 98% of India's pin codes. So I think using data, because number of people connect with us, customizing products which suit different pockets of customers, working towards reaching other markets which we have not reached yet, is probably the success story of Policy Bazaar.
Thank you. I think Animesh would fully agree with you on the visibility point, and hence the same model replicated that side. Animesh, you've led quality of the business for a decent time of your professional journey, and then you started leading the whole organization. What do you feel Insurtech have choices in terms of new customer segment like Gen Z, who are probably not engaging with the category today, as well as the old customer segment which are existing but are already tapped in by the incumbents? What choices do we have?
No, I think, see again, the point goes back to the previous point which you said, right? So there's a lot of evolution around the way the touch points are created for the consumers. 2-3 very simple rules which we apply, and I'm sure most of the other setups also apply. See, first you need to have a customer backward approach, right? So so you cannot have a portfolio view, like every customer is similar and you have a product which you are trying to push irrespective of who's the end user, right? So that's very critical. So instead of taking a portfolio view, there can be a customer segment view or an individual view, which is evolving now. And with more and more data-driven approach, technology kind of enhancing that approach, it's working out now, right, beautifully. The second thing is, and there's something which we apply very sharply, so I think very specific on insurance. When we think about product, typically we describe it as terms and conditions, right? So there's a promise which you are selling and there's a terms and condition that if so happen, I'll fulfill so and so, right? Our definition of product is very lengthy. It's not just the terms and condition. It starts from what are you communicating to the user? How are you getting them on board? What is the brand positioning you're taking to the touch point, the whole onboarding journey, to what you're exactly selling them? How are you explaining it to them? And then how are you settling the claim? And how are you renewing them as well, right? So all these touch points are part of the product, right? And all this has to stitched up together. It cannot be just that I have a terms and condition and let's go and bombard this to the customer segment, right? So that hyper personalization, connecting all these dots together. So these are all getting enabled with more and more Insurtech capabilities out there, more technology capabilities. And that has been our approach. This is like the priority point. There can be so many points which can list, but I think that customer backward approach where you are stitching all these points together, connecting all those dots, I think will be way forward.
Sure. Thanks. Thanks, Animesh. Vineet, coming to you, so there was a bit of decline in terms of funding for Insurtech as it was the trend in the last 3-4 years globally, same reflected in India. What we also saw that there was a particular early stage funding, seed funding, Series E, Series B, that was dominating the funding flow. Typical ticket size being 40 to 70 crore. What do you feel are the criteria beyond the traditional ones that investors are considering today, and how Insurtech can really tap into those?
Funding, I think, is dependent on many factors. It's in short, I mean, the end user of the fund is one factor where the final funding can flow, but beyond that, the amount of availability of funds, whether it's in a risk-off stage, risk-on stage, depends on a lot of uncertainties which might be going beyond the sector. So it's not just about what happens to that sector which determines whether funds are available, but it could also depend on various factors which might be beyond that sector itself, or even beyond that country. Global impact could be there. I think in a large trend, if you look at it, funding is more available than what it was a decade back. And a decade back, it was more easily available as what it was maybe a decade prior to that. So over a period of time, it is becoming easier and easier. People are now recognizing this model, and cost of fund is also maybe overall reducing. So from that angle, the trend is making funding easier. But yes, in the last 3-4 years specifically, if you ask me, the uncertainties have gone up. There are global risks which have come up. So obviously there is a risk-off which has happened on the fund side, and when the risk-off happens, the more uncertain business models are the ones where the first withdrawal of funds happen. So any Insurtech or any company which has got more, let's say, predictable business or has a better line of sight of what's going to happen in the next few years, and is able to convince the investors on that, will still find access to funds possible. Will not really have that challenge. But if you're in a really startup stage and you're still discovering yourself and trying to get the stage which you were talking about, it can become a challenge at times, because sometimes you're still pivoting yourself on how you want to shape your future. You're still pivoting on some things. You found few successes, and then you're trying to scale up those successes. So it's still a challenge at that stage. But yes, pedigree helps. It helps in just standing out of the rest of the clutter to get that fund. But it is a lot more dependent on outside the industry. So I don't think the industry itself should take the entire onus of thinking that we have done something wrong. I think it's a lot more macro factors than just the factor itself of the Insurtech world.
Sure, thanks. Rajiv, there's a particular trend in the last few years that we are observing that Insurtech are also considering offline as a critical model, and then setting up human touch point or POSP is also name of the game, and probably that has helped them scale. Who do you think is well poised to reap benefit of human touch point, insurer or Insurtech? A bit, I would say, political question probably. But what are your views? What do you think of technology leverage, and who can really ace this game?
So now, I mean, having handled both sides of the story, I've handled agency channel for 10 years for a largest insurance company like SBI Life, and having spent now almost 4 years at Policybazaar, I can tell you both complement each other. You know, at the end of the day, a lot of pluses and minuses on both sides. You know, I mean, as I mentioned to you in my earlier answer, it is critical, you know, for any model to survive by building a trust. You know, so while pure Insurtech model takes a lot of time to build trust, using POSPs has helped us to, you know, make inroads faster than what we would have made otherwise. So the whole purpose of having this POSPs in 98% of India's PIN codes is to create the financial literacy, which is required to tell people why insurance is important. Even today, unfortunately, we don't get up early in the morning having breakfast saying that I have to go and buy an insurance, right? Insurance is still sold. Unfortunately, that's the story, you know. And given the scenario we are in, to aim at having insurance for all by 2047 will not be possible unless we cover every deep pocket of this country, every taluka and every village of this country. Amit has been part of various programs I've attended together. There is one favorite area which I keep speaking. You know, we all talk about missing middle. To me, the missing middle is the today's 40-year-olds who will be 60-year-olds by 2045. Senior citizen population from 15 crores is going to move to 70 crores in this country. I mean, the number is mind-boggling. And roughly about 65 to 70% of these senior citizens don't have any income, nor they have an insurance, health insurance. Now, imagine the social security problem this can cause, particularly for the lower middle class who don't have any other income to support themselves. And that way, I think, in my opinion, it is crucial that both the traditional insurers who have a large agency force, who will have a lot of PSPs who work exclusively for their products, continue to build their force, while the Insurtech players will also have to invest in this area. We've seen a lot of few Insurtech companies emerging who only focus on POSP model. Probably we do both, we do hybrid. But what is helping us is, if we can use the POSPs to use the technology platform which we have built, use the technology platform to transform the education which is required for making people's decision easy, I think the combo will work very well, in my opinion.
Sure. Let me take discussion somewhere else. So, Vineet, the incumbents, they really have an edge over others because they've got large captive customer base. Now, the same captive customer base can be used very effectively to increase customer lifetime value and also having an impact on efficiency and profitability side. How do you think that the incumbents are driving these initiatives, and what could be done extra?
Yeah, no, I think that's a very, very important question, especially for large players like us. And we do spend quite a bit of time on figuring out how do we really increase lifetime value of customers. A lot of this, let me just first, before getting into the answer, just say that the backbone for this is data. And as data is becoming more and more available and data is becoming more and more organized within the organizations, this is now becoming easier to reach out to the existing customers and to talk about how we can increase the lifetime value, and also do multi-stage insurance planning for the customers. So we do have solutions which go across the stages of life for customers. So obviously there is protection, there is wealth creation, there is retirement, there is annuity. So there are these various segments that we can offer to a customer, and every customer needs to have all four of them in his portfolio at some stage or the other. So I think the first thing is, when a customer is getting onboarded, are we at that point of time trying to onboard as holistically as possible, or are we just talking about one product or one push? I think that's one side that we have been focusing on and trying to get to more number of policies, slightly more broader, doing better lifetime value calculation or the HLV calculation with the customer so that he buys the right product. The second is, once you have a large base of customers, how do you really now reach out to them and talk to them about the second product which they might need, or the third product that they might need? And that's where a lot of data analytics, segmentation of the customer, the proposition that you do, the kind of nudges that you give to the customer really comes in play. And obviously the entire proposition of the onboarding, making it very easy. So engagement with the customer becomes extremely critical. And the third cycle for an incumbent, now that we have 20 years into, more than 20 years into this industry, is also the lot of maturity, which is coming from the previous plans. And how do you really, go back to the customer who might not need that liquidity at this stage and are willing to, invest further for, having the liquidity at later stage. So that's again, another segment. So there are a lot of these ways that we work on it, and I think the focus is clearly there for the last few years now, and we do see results coming out of this very effectively.
Thank you, Rajiv. Let me ask the last question to Animesh. Animesh, one is engaging the customer through the same product, which is insurance. If you look at life insurance, it's a fantastic product, at least 10 years of customer life cycle that one has. But there is hardly any opportunity to engage the customer further. There's only renewal and a few things that happen beyond. If the insurance sector and insurance proposition get open for further product categories which are related in nature, how do you think that opportunity can be encashed by insurers and Insurtech both?
I think there's work in progress around this. I think in the new insurance bill or the amendment of the bill, there's a possibility maybe next year in budget session we may see that getting passed as well. If that happens in the shape and form, the way it is written, which is very flexible, I think this will be one of the biggest thing which will happen for insurance space in last few years, right? So what maybe Vivek is saying, that there's a potential of value-added services or related product regulations opening up in the insurance space. I think the possibilities are infinite, right? And I want to define insurance in a very positive way. Like, this is one thing which we undermine in some sense. See, someone who is, if I'm an individual, I'm taking a loan. A loan is an example, payments, and there are other financial products also. Most of the time, these are low trust markers in some sense, where I can take a loan from any bank. Whoever is giving me money, I'm happy, right? But someone who is buying insurance is a very, very conscious decision. You are you are figuring out what insurance company I'm buying from. You are gauging them on 100 things, right? So if you're buying an insurance product from any brand, you have a great trust with them, right? And so the kind of relationship we can build with the customer is very high, and that unlocks a lot of opportunity when we think about related products, right? The customer will actually be super happy to engage with us on multiple other products, right? So it will lead to two very basic things. One is obviously solving the whole profitability challenges for the insurance company, and then deepening the whole customer relationship, which can further unlock new opportunities for them, right? So we need to see how the insurance companies react. The second thing is what can be the layer of regulations which will be built on top of the bill getting flexible. So we need to see those couple of things, but this will unlock a lot of opportunities for the insurance space altogether.
Fantastic. Thank you so much. Animesh, Vineet, Rajiv, thank you so much for your time. I would love to carry on the discussion while the panels are waiting. So thank you so much for your time and insights. And thank you, audience, for being so patient. Thank you so much.